Hello and welcome to HiWayFX market news for January 28, 2016. This morning, the main currency pair was trading around the level of 1.087 by losing 0.2%. At the moment, we're observing a technical correction in the euro-US dollar pair. On Wednesday, the euro reached a one-week high of 1.0918. It happened after the releasing of statement from the Federal Reserve meeting. The Fed kept interest rate unchanged as expected and said the US economy was still on track for moderate growth and a stronger labor market even with gradual rate increases. Bloomberg notes that Federal Reserve Chair Janet Yellen and her colleagues have opened the door to a change in the outlook for the economy this year and possibly a slower pace of interest rate hikes that would make a move in March less likely. The meeting was a tricky communications challenge for the Federal Open Market Committee. US central bankers had to acknowledge dimming expectations of global growth that have resulted in a sharp stock market sell-off while avoiding a definite directional hint on the timing of the next rate increase. After all, it is only 6 weeks since they raised rates for the first time in almost a decade. Overall, the statement reflects the caution that one would expect a central bank to use in the current volatile environment. But the Fed hasn't deviated from its previous message, with future moves in rates remaining in the hands of the incoming data, analysts at ANZ wrote in a note to clients. The resistance levels for euro are 1.0937 and 1.0965. The support levels for the euro-US dollar pair are following 1.0844 and 1.0817. On Thursday, we observe a technical rebound with the New Zealand dollar-US dollar pair. At the moment, the pair consolidates around the level of 0.6450 by adding over 0.44%. Yesterday, the New Zealand dollar tumbled from 0.6530 to 0.6417 by losing over 2%. It was a reaction of Reserve Bank of New Zealand's meeting. Reuters reports that the Reserve Bank of New Zealand said uncertainty about the strength of the global economy has increased, noting weaker growth in the developing world, particularly China. While the Reserve Bank of New Zealand also kept rates steady at 2.5%, it said further easing may now be required, an abrupt turnaround from December when it flagged that it might be done cutting. The Reserve Bank of New Zealand also said a recent rise in the Kiwi dollar was unhelpful and that the further depreciation would be appropriate in order to support sustainable growth. The resistance levels for New Zealand dollar-US dollar pair are 0.6465 and 0.6505. The support levels for the New Zealand dollar are 0.6415 and 0.6405. This morning, oil is under pressure. US crude oil was trading around the mark of $32 per barrel by losing 1%. Reuters notes that oil was eroding gains of nearly 3% made in the previous session after Russia held out the possibility of cooperating with the OPEC to control global oversupply. Russian officials have decided they should talk to Saudi Arabia and other OPEC countries about output cuts to bolster oil prices, the head of Russia's pipeline monopoly said on Wednesday. But falls were curbed by a weaker dollar following the Federal Reserve's decision to keep its overnight interest rate unchanged, and the release of a statement suggesting concern about global events has diminished, but not squashed chances of a rate hike in March. The resistance levels for oil are $32.80 and $33.30. The support levels for oil are $31.35 and $30.80. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website, www.hiwayfx.com. Thank you and have a good trading day.